Module-based planning provides complete planning and budgeting solutions for financials, workforce, capital, projects, and strategic modeling, with built-in best practice, predefined content, including forms, calculations, dashboards, drivers, and key performance indicators. Financials provides integrated driver-based planning for income statement, balance sheet, and cash flow. Let's plan for some driver and trend-based accounts. Navigate between sections using the links on the page. You can plan for current assets, such as accounts receivable and inventory, and fixed assets, such as depreciation. And you can plan for liabilities, such as accounts payable, short-term loans, or equity, such as retained earnings. Retained earnings is derived automatically. Let's note the following values. Over $680,000 for accrued expense, and over $51 million for accounts receivable. We'll be making adjustments to the drivers for these accounts to see their impact on these balances. We are going to plan for our accounts receivable, which is derived from the days sales outstanding driver. For your driver-based accounts, you can enter your assumptions here and make adjustments here. So let's say you want to take the current month's actual for days sales outstanding, or DSO, and for the accrued expense as a percentage of operating expenses. However, you want to include a 3-day increase for DSO and an additional 2% increase for accrued expense. The calculated total from your assumptions, based on the current month's actual value, plus the 2% increase in accrued expenses as a percentage of operating expenses, can be seen here. Let's take a look at the calculated values based on the driver information you entered. After you enter your assumptions, you can review the pre-configured balance sheet, which includes calculated values based on those assumptions. Accounts receivable is derived from the days sales outstanding. DSO is the number of days it takes to receive the funds from our customers for purchased goods and services. Accounts receivable increased from over $51 million to just under $60 million. Accrued expense also increased. You can also enter additional adjustments on this page. For those accounts that are not driver-based, you can plan for those accounts based on trends. Let's say you expect to better manage your cash, so you plan to decrease the surplus cash in the plan by 5%. Similar to driver-based accounts, you can adjust the trend up or down by a percentage, or make an adjustment to the calculated value. Here we can see calculated totals for balance sheet accounts based on the trend information you entered. You can make additional adjustments on this page. You can create reliable future plans by basing them on trends. Your plan data automatically flows into the pre-configured balance sheet. The latest year-to-date values are automatically updated without having to modify the form. You can find the prior year and current year's data on this page, as well as the forecast and actual data. Next, let's go to the Direct Entry tab. For accounts which you cannot plan based on drivers, or prior year, current year, or trend-based values, you can manually enter or edit data. For example, our Corporate Initiatives Department provides an estimate for short-term investments. You can manually enter the data here. If we take a look at the balance sheet, we see the short-term investment value automatically updated. The value was increased by the $450,000 that we just planned. Here you see that the full balance sheet plan is derived from your inputs, and it includes information from the income statement as well as other sources. Now we can take a look at our cash flow. Here you can see the cash flow for your organization. Cash flow is calculated indirectly from changes to non-cash accounts on the balance sheet and income statement. Cash flow reporting derives the cash flow based on changes to balance sheet accounts, such as accounts receivable, inventory, accounts payable, depreciation, and other investments. You can make adjustments to your derived cash flow. On the Direct Entry tab, you can enter information for accounts which will not be derived. For example, you can enter a value for dividends paid. To learn more, visit docs.oracle.com.